Hey everyone, and welcome to Stock Talk for December 12th. And let's start off with this question to everyone watching this YouTube video. Is the market going to give us a clear-cut signal of where it will go next? No. As a matter of fact, by now you're probably accustomed to wild swings within the markets. $5, $6, $7 on the S&P 500 or SPY is of the norm, right? And this has been occurring for the past few weeks, to be honest. So looking at SPY today, you can see once again some wild fluctuations. We closed the day yesterday. It was average. There was really a fight between the bulls and the bears, pretty much in the middle. But we can see overnight we went higher and we actually opened quite nicely, and we were maintaining those gains until we had this rather rapid movement back to the downside, and we closed the day actually as a red candle on the yearly chart. Now, I want to take you to the 5-day, 5-minute chart. I don't want to tell you about the volatility. You know the volatility is here, but what we can see is rather deceiving. What's happening here is you can see that when we're moving higher during pre-market, aftermarket, it fades away during the day. Pre-market, aftermarket moves higher, it fades away during the day. Okay? So that has been the theme, but what is it doing net for the markets? The market is still making a higher low and a higher high. That is what we want to see on an uptrend. We certainly don't want to see it fade its gains or a majority of its gains, but it's still maintaining its positive momentum. Okay, now looking at the yearly chart, here's the yearly chart of the S&P 500, and a member in the Discord chat talked about how we were getting rejected at the 20-period moving average, or the light blue line. And has this happened in the past? Of course it has. We've done that multiple times when we get near the 20. So once again, the market isn't going to give us a clear-cut signal, in my opinion, that, hey, we formed this tail candle, we've satisfied a condition in which we held a support of 263, let's start rallying back up, right? No clear-cut signal, but net is that we are still maintaining positives in the market, and therefore I am still leaning towards I'm leaning towards a more bullish scenario despite what's happening intraday right now. But the line in the sand, in my opinion, it has to be 263. This is the level that we were watching, and if this level doesn't hold, look for that to really start dropping quickly. And the reason why is we've already had this type of candle, right? This candle, this low of this candle was around 258 and change. And this could have been a capitulation move, but we had bulls pull it up during the latter half of the day. Everyone was probably watching this level at that point. So that's the line in the sand. If we get down here again, do not expect, once again, 258 to hold. I'm expecting us to move significantly lower towards the red box of 250. But right now I'm still favoring a more short-term bullish scenario in which we push higher. Okay, so point here is we talked about how to look at the markets, right? If you're looking at investing, possibly investing, is really don't chase the trend. When you chase the trend, what happens is that you might very much end up taking a loss, whether you're shorting or going long, in both cases. So, be careful. TVIX or volatility. TVIX isn't making things easier either. You can see TVIX on the intraday chart, how we actually held a support, $48, quite nicely, right? Look at TVIX volatility, held the support. While SPY was making higher highs today, and this is a lesson, for everyone. While SPY was making higher highs today, what was TVIX doing? Why wasn't it making lower lows? And that has to be a question on everyone's mind. Why was volatility not making lower lows when SPY was making higher highs? Were people expecting a fade at the end of the day? Probably at this point, right? So you just got to be careful that we held this support quite nicely, and then we rallied up towards the end of the day. So volatility, I still expect volatility. So looking at the yearly chart, it's not making it easy for us, right? It looks like we're still at the 200, but in my opinion, I expect this to push lower, let's say in the short to medium term. And then once we get down to, let's say, the 30s, we'll evaluate where TVIX is, and then we'll see from there. But by the time we're in the 30s, chances are SPY might be already at around 280 or 281. Point here being is, the market isn't going to make anything easy for investors, but what you should recognize is the net movement every single day. Not necessarily, you can place some emphasis on some intraday movement and how we open and close the candle, but the net movement, how did it do throughout the day? So there you go. That's volatility for everyone. And then let's take a look at crude oil. So we talked about crude oil. As you can see, crude oil went down today. So crude oil is still, with a 20-period moving average sloping lower, it's still below the 20, right? So this is, so far, what you can't really do much with this chart, right? You could, if you were bullish crude oil, you're really hoping for a push above the 20 at this point. So just be careful if you're in crude oil, because while this looks like it wants to push to the upside, we're still below the 20. So the question here is, do we have really a confirmation that this is going to be pushing higher? And the answer is not yet. It's not there yet. But we will have to be monitoring this because this is very close to support levels, right? We talked about $50 being a very support level, and we have two very close trend lines, horizontal support levels that we will be monitoring if it gets down there. So I think be a little patient on this one, and patience will eventually play off for this kind of crude oil chart. Natural gas. So here is natural gas, and we had an astounding move back to the downside. Now, remember in the previous talk, we talked about how this looked like a consolidation for another possible move higher, right? But instead, what happened was this consolidation released its energy to the downside. And in fact, this is a very important resistance level of 4.846. So you might be asking, well, Kevin, how did you know that 4.846 was the resistance? So I take you back to the 20-year monthly chart and showing you that this corresponds with what? The 200-period moving average as well as multiple reactions in the past, right? You can see that it contained price over here. It's contained price over here. So right now, this is likely to push lower. I would look for natural gas to continue to push lower in the meantime. And let's take a look at this. You can see that we're definitively below the 20. So can we come up a little bit? Yes, we can. But in my opinion, the objective shorting opportunity would have been near the resistance. And if we push lower, then you just let your account go in that direction, right? So that's natural gas. And then finally, let's take a look at GC or gold futures. Gold futures maintains a support level of 1242, 1241. We haven't gotten back down over here and retest it. So I think it'll be being a little more patient on this one. For this one to drop a little bit could be a good sign. So this is showing strength, right? Gold continues to be bullish in the long term. And I would look for this one to be pushing higher after a retest of 1243. So I'm going to keep this one short. Hopefully everyone enjoyed this analysis. Hit that thumbs up button, that like button if you enjoyed this video. Just want to tell everyone, kind of give a roundup of my thoughts in the Discord group. Once again, there's a notice, and I'm posting a market sentiment, my personal market sentiment based off of technicals, fundamentals, and price action, and so much more, all in a little kind of odometer chart. So keep on the lookout for that. In the meantime, thank you very much for watching this video. See you all soon. Happy trading.